common expectation after the Fed cuts rates is the market will suddenly rocket to the moon. But is this true? Let's dig into it. How does the market react when the Fed changes rates, both up and down? The timing of this is perfect, as Nick Maggiulli, sorry if I destroyed your name, Nick, from Of Dollars and Data wrote a terrific article on this. I'll be sure to put a link to it in the description. Now, as some background, the Fed just did an emergency cut to rates of 0.5%. The market responded positively to this by quickly rising about 2.5%. Unfortunately, the sugar high quickly disappeared and the market sold off everything and more. It actually finished the day down nearly 3%. Now, this is not the reaction people were probably hoping for, but it begs the question of what has the market done over history when it comes to both rate cuts and increases. Nick did the hard work here by going through the data back to 1994. In total, there were 73 rate changes. The results to the S&P 500 were interesting to say the least. Of the 73 rate changes since 1994, 40 were increases and 33 were decreases. When you graph this over the market performance since 1994, the trend is the Fed increases as the market is rising, and they cut it when it's heading down. Seems logical, right? Now, let's dig a bit deeper into how the market responded to past cuts. Nick's findings are, after a cut, the market has subpar performance. So, maybe the recent reaction shouldn't have been a surprise. When you look at the median return of both all days, AD, and days after Fed cuts, FC, the data is even more eye-opening. Let's take a look at some specific numbers from trading sessions. So the first 5 trading sessions for all days, the market was up 0.3%. After the Fed cut, 0.5%. Now, I'm pretty sure this isn't story time and you can read, so I'm not going to go through every data set here, but we're looking at data sessions or sessions of 5, 10, 20, 60, 90, 100, and 250 trading days after. So again, all days and days after when the Fed cuts. So you see a trend here. For all days, the market is slowly working its way up. For days after Fed cuts, it's slowly increasing, but then after a few months, that sugar high is gone. And all of a sudden we see after about a full year of trading, after Fed cuts, the trend has been the market is down almost 14%. Now, please don't make giant assumptions that the Fed should never cut, because this is a limited data set. We don't know answers to the questions of whether these cuts avoided worse outcomes. Simply, I thought it was a great answer to the question that gets asked so often of how does the market react when the Fed cuts. In the meantime, I would highly recommend you take a look at his article as he dives deeper into the topic of how the market is not the economy. At a minimum, now you can impress your friends if they say, hey, the market always goes up if the Fed would only cut more. Thanks for tuning in.